In this following video, we are going to explain how to do an investment evaluation based on data retrieved from Bloomberg. We start off by choosing a company that is quoted on one of the stock exchange markets. For this example, we're going to choose Telefónica Equity, which is quoted on the Spanish stock exchange IBEX 35. And once we're in Telefónica, we're going to choose the command Financial Analysis, FA. We need to make sure that here on top we see Telefónica as company that has been selected. Once in the FA menu, we're going to press on BS, which stands for balance sheet. And once in the balance sheet, we're going to have a look for the position property, plant and equipment. If we scroll across to the end of the screen, we see that the last 2 years, 2018 and 2019, the information for property, plant and equipment is introduced here, and we need to extract these two numbers, the data for 2018 and 2019, since the difference between these two values is going to be our initial investment outlay, which we need, of course, to be able to evaluate our investment. Next, we're going to go to the Related Functions menu, and we're going to introduce the command Earnings and Estimates. Once within this new screen, Earnings and Estimates, we need to scroll down to number 16, EBITDA, Earnings Before Interest and Tax, Depreciation and Amortization, and once pressed on EBITDA, we see that there opens a little field on the bottom, Earnings and Trends. We click on Earnings and Trends, and in the next window that opens, we see that we need to here again select the position EBIT, Earnings Before Interest and Tax. Here we see on the left-hand side that we have information about previous years up until 2019, and we're now interested in knowing the forecast for the following years. In order to see and visualize these forecasts, we need to press this little arrow to the right, and we see that more years are going to be included in the screen, 2020 up until 2025. So here we see these are the forecasts made by Bloomberg for the next years up until 2025. We're interested in this information, and we need to export this information by clicking on Export on the top left of the screen. Once we export this data, we see an Excel sheet opens up, and we now have here the yearly or the annual data up until 2025. We are interested in the absolute values for our forecast, not in the values as you see here on the right, which are the percentage increases or decreases over the next year. We're not interested in that. We're interested in the data on the left of the screen. We return to the Bloomberg screen because in the next step, what we need to do is we need to now identify what the discount rate for our investment evaluation is going to be. And so we're going to look for the weighted average cost of capital again for Telefónica, okay, which is the WACC. Make sure that Telefónica is still the company that is shown on the top left of Bloomberg screen, since the data which is shown below in the screen is related to Telefónica. And now, once we introduce the WACC command, we actually see that the weighted average cost of capital, 3.6%, is indicated here in this following screen. This is going to be the discount rate that we're going to use to evaluate our investment opportunity here for Telefónica. Now, once you've exported all this information, what you need to do is you need to do the calculation of the net present value and the other data as requested in your Bloomberg assignment for financial management.